All right. Well, welcome everyone. Thank you so much for joining, on a quick after lunch webinar. We're very excited to present to you. So for those that don't know me, I'm Joe Agresta. I'm the CEO and co-founder of Abodey, which is a prop tech platform helping home buyers, specifically owner occupiers, and supporting professionals like yourselves to have and give more value back to your customers. Today, we're here to present to you guys on this webinar for a lot of value and a lot of reasons. We have Stephen here from FBAA. So some of you may already be members of FBAA, and if you're not, hopefully you are by the end. And then we also have Donovan Roberts here, who's from BrokerFi. He's helping in the assets finance space. And today's presentation is really about how do we add value to your customers? How do we help support and make those partnerships that, help our customers, whether they're home buyers, investors, do all the things that they need to do, whether it comes to property and finance solutions. So I'm going to pass the baton on to our first presenter of the day, which is Stephen. Stephen, I will hand over to you to chat through the next part of the presentation. Thank you, everyone, for coming.
No worries. Well, thank you both, Joe and Donovan, for having me on. It's an absolute pleasure. By way of introduction, for those that don't know me, I actually work for the FBAA, and my position is National Commercial and Asset Manager. So my role essentially covers off on all things commercial and asset finance. So from our membership to our sponsors and all our events and things like that. So I've had the pleasure of being in the industry for over 20 years now. I've been on both sides of the fence, so to speak. Previously as a banker for ANZ for around 14 years, and then also as a broker for about 6 years. So I kind of feel the pain on both ends of the scale when it comes to our industry and what makes people tick and where lots of opportunities lay. But moving on to the actual presentation around what the FBAA is all about, we're a purpose-driven organisation. We have been around for a long time, since 1993. We currently have over 14,000 members Australia-wide that cover off on all things broking, so from mortgages to asset finance and commercial and everything else in between. Our mission and our purpose is really clear. We're here for brokers and helping them grow and succeed. Every time we think about a new project or a new opportunity, we think about, is it going to help a broker grow and succeed? So that's the mantra for us. It's all about helping our industry. And it's something I'm extremely passionate about. And it's the reason I joined personally. I sold my business as a broker to join FBAA because I wanted to make a difference within our industry, because I feel like there is so much that can be done to make it better than it is today. So the little mantra I run by personally is making our industry better tomorrow than it is today. So that's what I kind of live by on all the decision making around the things we do. If we could go on to the next slide, please, Joe. Thank you. So the advocacy piece is something that's really important. We, as brokers, lots of my conversations lead to, things like clawbacks, channel conflict, all of those types of things that are a very important topic. And, we'd love to be able to change them overnight. But the facts are, when you're dealing with governments and policymakers, it doesn't always work as quickly as we would like. Education is something that is super important, and why I'm sure a lot of you are here today to learn about, different parts of the market that you might not be that involved in today. And we drive that every day. A lot of our events is surrounded by education and teaching brokers the fundamentals on how to be more successful in their business. So it's not about telling them they're not successful. It's about how they can be even more successful than they are today. And the support mechanism is something that's another thing that's really important. And a lot of people probably don't realize, we're here when nobody else is willing to listen. And we hear that a lot, whether it's, the banks, whether it's the aggregators. We work closely with everyone, but we also are here to support our members. And sometimes it can be the smallest little thing that's, causing issues, but then it can be obviously much larger things as well. But we're here to help, and we have great support mechanisms across the association. We have state managers in all major states now. We actually recently appointed a new state manager in South Australia. I'm not sure if anyone's on here that's from South Australia. We have a state manager now in South Australia, which is a newly created role. So we have boots on the ground across the country. I personally am based in Melbourne, but I'm lucky to get around the country and connect with all our members across the country, which is something I really enjoy doing because it's always quite interesting for me speaking to people across the country and different areas. They have different problems. It's a real interesting conversation for me all the time. Now, if we could move on to the next one, please, Joe. Thank you. So we something that we pride ourselves on is we are agnostic. We work with all aggregators, we work with all lenders, but we don't get influenced by them. We are all about broker, and that's something that taking anything away from today's session is that we are about broker, and that's what we really strive for, because we want to support our brokers as I've touched on. Now we have a very interesting kind of org chart, if you want to call it that, where we have the internal staff, we have a board, we have the internal staff, the sales team, which I'm a part of. We have our back office membership team and support team. But we also have our state councils and our state presidents. Now, for those that may have, come to our coffee meets across the country in the past, you would have met a lot of our councillors and our state presidents. Now, they are volunteers that work for the FBAA they come out of their business to support the brokers and the industry by giving back. And it's something I think is really cool. And I every time I see them and out in the market, they have their little polos on, their FBAA, and they're really proud of that. And it's something that I think is really important in our industry, that we live by the community aspect. It's something that is something that is a bit of a point of difference in our industry, where we have brokers giving up their personal time out of their businesses to help other brokers. Something that I think can't be compared to in our industry. And I really love that. Moving on to the next stream, please, Joe. Now, we have lots of benefits of being a member of the FBAA. One that gets overlooked a lot is member benefits. So for those that are members, hopefully you've seen it, but if you haven't, I strongly recommend getting on our website, because there's so many things that you have access to as a member. It's not just a membership that you have to have. There is lots of value in it. So I do encourage people to jump on the website and use the tools available on the website, whether it's around marketing, whether it's around education, whether it's around, having discounts on a range of, things that we offer. It's really good. I know a lot of people do use it, but there's probably a lot that don't as well. So really, got to stress that, utilize all the things that you have, and, really take advantage of the money that you spend each year as being a member, and take advantage of that. Moving on, Joe. Now, we also have like a referral program, where if you're a member of the FBAA and you actually refer somebody in to become a member of the FBAA, you actually receive 10% off your next renewal. So, in times of uncertainty, as we may all be facing at the moment, I know personally, when I go to the petrol station and throw in $250 worth of diesel in my four-wheel drive, I feel a bit sick to the stomach. So, a few bucks back in my pocket would be, pretty handy. So again, if you know people out there, we know the community feel is so important, and lots of brokers know lots of other brokers and people that want to come into the industry. There's an opportunity there for you to save a few dollars as well. So definitely keep that in mind when you're referring somebody on. And for those that are not members as well, if there are non-members on here, we do have a pretty cool program, what we call the MTI program, or member transfer incentive, where if you're a member of one of the other fantastic associations out there in the market, you can actually join the FBAA free of charge. So you can actually join us for the remainder of your current renewal with your existing association at $0. So as an example, if you've got 10 months to run on your current association membership, you can join the FBAA for free up until that renewal is due, and then you can either decide to stay with us, go back to the other group, or in a lot of cases, there's lots of brokers that are members of both associations because they see value in having both. But that's completely up to you. Moving on to the next slide, please, Joe. Now, we do lots of things out in the market. We do lots of virtual events. Every Wednesday, we host webinars, which are really well received. It's a bit of a momentum tool that we built last year, where we used to do things a little bit ad hoc when it came to webinars, but now we do them every Wednesday. So our members just know that every Wednesday there's an FBAA webinar on, and we do a whole range of different things from our sponsors and lenders and partners. They jump on, and then we have government sometimes, and we have people from outside the industry. There's a whole raft of things that we put on. I strongly encourage that you guys jump on and have a look at that. There's some really cool insights. In addition to the recording of these events, we also put them on our Education Institute, which is another cool thing where people go back and see if there's a particular topic or something that they may be interested in, you can watch it back. Surprisingly, we have on average over 2,500 views on about a two-month cycle. So where we go back and look at what people are rewatching, and there's thousands of people jumping back on it. I didn't think that would be a thing, but the people have proved me wrong by jumping on and really taking a hold of all that content. So it's a pretty cool thing. And moving on to the next one, please, Joe. Thank you. And outside the virtual events, we also do lots of live events. Obviously, had the pleasure of seeing Donovan down at our commercial masterclass yesterday in Melbourne, which we kicked off our commercial tour. That started in Sydney on Tuesday, in Melbourne yesterday, and we go across to Perth next Tuesday, and then we finish off in Brisbane on the 2nd of June. So we're kind of halfway through at the moment. Lots of effort goes into these events, and really, it was really well received so far. So again, all about opportunities to network and collaborate with your peers and colleagues, as well as all the lender sponsors that obviously they invest a lot of time and money to come and support. So it's a great opportunity to get in front of people that you may not see that often. And then all the content that we put on is it's all educational stuff. Yesterday, we delivered on a business credit writing workshop, which, is always well received. Trent Carter from Ascendo Financial delivers that content, and he's an absolute gun. He's one of the best presenters in the country, in my opinion, and he's always really well received. So outside of the larger scale events, we also have our coffee meets, and they're the events I touched on earlier where our state councils run. So we kind of market them at head office level, but the councils actually run them. In Victoria, as an example, we do one on average every 3 weeks, and we shift them around the suburbs. So we don't always do them in the same place. We shift them around, we move them to different areas. I just noticed the ones on here are a little bit outdated, but we do have a lot that we run in Melbourne, same across the country. So if there's anyone interstate, again, I'd really suggest getting on board with them. They're short, sharp little events where we have a couple of sponsors come, have an opportunity to connect with our members, and it's just a great way to just connect in a community. We know what broking can be lonely. I experienced it when I was a broker. We get caught up in day-to-day hustle and bustle of trying to win the next deal and write the next deal, but it does get lonely. So those that do come along, they love it, and we've got a bit of a pattern now where there's a lot of the repeat people coming because they just love connecting with the community. So it's a really, really cool thing. Moving on to the next slide, please. Now, I will finish up now, and I know there's lots of content that Donovan and Joe want to run through, but one thing I will say is, in our industry, we're currently across the board, and different sectors are probably potentially feeling different things. But what I will say is we're in a time of opportunity. People laugh when I kind of say that, but we know there's some uncertainty around interest rates. We know the government released a budget only a week and a bit ago, which, there was lots of questions asked on the back of that. But there is still opportunity out there, and um, I really can't recommend it high enough just to really connect with your clients, stay close to them. And if there's any way that I personally can help, I'm happy for my details to be shared, or they're actually on the screen. So there you go, you've got them. Feel free to reach out, give me a call, love a chat. Love to hear how you're traveling and how we can help you, through these uncertain times, because we will get through it. There's been lots of these times in the past, and we've got through it, and then this will be no different at the moment. But outside of that, again, I want to thank you all for coming on today, and thanks again to Donovan and Joe for having me on. But happy to field any questions if anyone's got anything pressing they want to throw at me right now. Hopefully not about clawbacks, because that's the first one that always comes up. But I'm here to answer any questions if anyone's got anything for me.
Yeah, please do. Ask any questions, Steve. Great presentation. Thank you so much. It makes me sad that we don't have that for buyers agents out there, not as thorough as this. So I'm going to have a word.
I
I just,
Should been a brief.
yeah, I just want to jump in and say thank you again, Steve. Yeah, obviously FBAA I've been a member of for a couple of years now. Put on some amazing events. I go to the commercial masterclass every year. I was there yesterday. It's such an amazing event. And even though Steve's a national commercial manager, he still has time to have a coffee with me. And, has even offered to share some of my dumb ideas on his LinkedIn to his network. And I'm a small fish, I think, in the FBAA, but Steve, you always had time for me. So I appreciate that. I mean, even jumping onto this webinar with us now. So I can just say, for those that aren't FBAA members, you'll be looked after if you ever think of jumping across. So always reach out to Steve if you have any questions.
Awesome, mate. I really appreciate that. And as I said, we're all about broker and want to help brokers succeed. And if there's anything that I can do to help with that success, I'm more than happy to help.
Yes, mate. Thank you.
Well, guys, feel free to come off mute or write in the chat if you prefer. But if you have any questions for Steve, feel free to drop them now. And if you don't, that's okay. If something comes to mind after the webinar, we will, Steve's details are there. We'll share them after this and distribute, so you can reach out directly if you need to. But yeah, feel free to come off mute. I'll give that a moment.
That's such a good job, mate. They got no questions, so that's always a good sign.
No, thank you, Steve, so much
Awesome.
for presentation. That was really good.
Awesome.
Thanks, Steve.
Thanks, guys. Cheers.
All right. So for the next one, I think we've got in the hot seat Donovan. Without further ado, I'm going to hand the button back to you, Donovan, with your pretty face on the screen.
Beautiful. G'day, everyone. Thank you so much again for jumping in. And again, apologies for the mix up with the Zoom links. Who am I? So BrokerFi is asset finance brokerage. Essentially, we do everything except mortgages. That's your speciality. We don't touch that. My speciality is asset secured and unsecured lending. So for your consumer and your commercial borrower. Today is specifically going to be more about the unsecured lending. And the reason being is, first of all, no one's buying cars. Dealerships are quiet. No one's, unless you're in a need for a vehicle. So why I'm talking about unsecured lending is because today, with the cost of living crisis and everything, everyone is stressed about money, obviously. And the best way that we've been able to help is to consolidate debt, gain access to further funding. I've seen a lot of, and I'm sure you guys have as well, people consolidating their debts in their mortgages, but generally could hit issues with LVR that, they just don't have enough money. The directors have tax debt. They have credit card limits or car loans. They just don't have the capacity to do it. So I'm seeing more and more of that when it comes to the unsecured lending. And also on the flip side, helping people actually get to the body borrower ready side. So talking about deposit funding and all that kind of stuff. So Joe, we'll jump on forward and I'll get into it. I'll try and keep this as brief as possible. So again, why mortgage brokers? If you guys offer unsecured lending, great. If you don't, it's definitely something you should do. Everyone needs it. There's something like 8 billion. So I'm just submitting somewhere else. There's about $8 billion in unsecured lending out at the moment, but 80% of that is for unsecured debt consolidation. So people paying off credit cards, consolidating everything in one payment. So,
ये भी ठीक है।
oh, there you go. Cool. So I don't know how many of you have had clients, but I've had a lot of mortgage brokers come to me with the main problem of excess debt. So they have too much debt. So the credit cards, the personal loans, tax debts, that they're not able to, uh, they don't have the capacity to be able to borrow. So one of the things that we're doing with unsecured loans is we are consolidating them, putting all the debt into one, stretching it over a 7-year loan term, ideally reducing their monthly commitments by anywhere up to $200, $300, $400, $500 a month, depending on the size of the debt. Now, the best thing from my point of view is most of my my personal loan lenders don't have clawbacks, right? So from my point of view, it's it's a stepping stone for the customer where we can consolidate their debts into a manageable payment. You guys can then refinance their mortgage, take out that money to pay out that personal loan within the space of like 2 or 3 months or even shorter. I don't get a clawback. The customer gets their refinance done. Everyone's happy. So from a unsecured lending point of view, when it comes to capacity, try and have a look at it. All right, if they have a few different loans, they're not servicing based on the liabilities they have. What would it look like if we were to consolidate it into one and stretch it out over a 7-year term? Most of you would be able to do that. Would they have capacity to be able to afford a higher lend or afford the lender they want? With the idea that then they're going to consolidate it back. That works with renovations as well. Don't have the LVR to do the 50, 60, 70 grand renovation. They want to do a bathroom, a kitchen, whatever. I can't take out of the mortgage just yet, wife's on maternity leave, whatever it is. We can do a personal loan to access that money. And then 6 months, 12 months down the line, when the renovation's done and you get the better valuation, you can then consolidate that back into the mortgage. So it's a really flexible way to sort of get an interim, solution, or an immediate solution if they're failing capacity, and consolidating it will get them the capacity to be able to borrow. Joe, we'll go on to the next one. Oh, there you go. Okay, so debt consolidation. Cool. So the major things we see is the credit cards. I had a little slide I forgot to put into the presentation, but it was showing the difference between what it would cost to actually pay off a credit card over 5 years and pay for a personal loan over 5 years. Now, I had a lot of people come to me and they say, "Oh, actually, I don't want to take out a personal loan because the repayments are higher than the minimum repayment on my credit card." It's like, yes, but the minimum repayment on your credit card is going to take you 58 years to pay it off. If we do a structured repayment, so you're going to pay off what it's going to cost to pay off your credit card in 5 years versus what's going to cost to pay out a personal loan in 5 years. For a $10,000 credit card, you'd be $5,000 better off after the 5-year period by taking a personal loan. $20,000 credit card, you're $10,000 better off. And that's purely just due to the interest rate. So having structured repayments on the credit card and the personal loan. But the credit card is obviously still dangerous because as you pay it off, you have the ability to continue to respend on it. So when you have a credit card, you're in a debt cycle trap. We try and consolidate the credit card and close it off. Multiple debts, obviously combining it into one. And the clear timeline as well is giving customers a clear timeline to say, all right, well, instead of just, doing ad hoc payments here and there, being able to consolidate or having multiple payments with different payment dates and end terms, consolidating into one, having a clear structured timeline. Again, this isn't just a step to help your customers always get into the property that they want, but being able to offer that service. And I promise you, almost every single one of your clients are out there applying for personal loans or a credit card or, some sort of lending. Maybe not right now, but they will in the next 12 months. And being able to offer that service as well stops them from having to go to another broker that maybe has another affiliation with a mortgage broker. We don't, obviously, anything that comes to us, we have a clearly, a really good CRM. It clearly lists any referrer, and obviously that lead will always come back to you in the future if they ever reach out to us again. Joe, if we can scooch on. Cool. So cleaning up the application, again, this is about structuring the personal loan. I think I've sort of touched on this again a bit in the beginning, so apologies if I'm repeating myself, but you may not have a client that's ready today, but getting them an unsecured option to be able to get ready for lending down the line. I think can't remember. Joe, if you could just skip to the next one. I think yeah, okay. So this one, yeah. So the deposit support. So this is where another one that I've been getting a lot recently. It's um, potentially a first homeowner or buying an investment property. They need some additional deposit to be able to get them to they've got the capacity, right? So taking out a personal loan is not going to affect their capacity to lend. That is the major like point of difference is you can't have a personal loan that's going to impact the borrow amount. You've got a husband and wife, capacity is not an issue, but they don't have the deposit or they close there at, 85%. They need an additional 5% so they don't have to pay LMI. You can take out deposit funding. So you can take out a personal loan to pay towards deposit. Lenders will lend money for that. Now, whether the bank is going to want to accept that that's where the deposit has come from, generally what we've had to do is we funded 3 months earlier. They put it into their savings account, and then they could show 3 months of genuine savings at the level that they need. In addition to that is the settlement cost. So funding stamp duty, we can do again. So you're not adding it to the LVR of it. The support to move to renovate pre-moving in. I've just done a deal for a customer who's just bought their house. They've got settlement in about 3 weeks. They're looking at funding now so that they can take out. They've got popcorn ceilings, a 90s kitchen, an 80s bathroom. Taking out some money so they can renovate the property before they move in, rather than using. So again, the bank will allow them to keep some of their deposit, but it's not going to be enough to be able to renovate it, and it's too hard to renovate it. It's too hard to clean popcorn ceilings once they're in there. So taking out those funds pre-moving in. Tax debt. I'm sure every one of you that has ever had a business owner come to them for a mortgage has had somebody with tax debt. We can offer solutions to fund the tax debt in a personal loan, which will then, or a business loan, it's up to you, but the cleanest way is a personal loan without tax returns and without financials. If you've got a strong enough borrower that's got good income, we can do it purely on just bank statements for the director or for the sole trader. We clear out the tax debt. Then again, you can go to your majors, get funding without the tax debt, and then consolidate in the personal loan into the mortgage. So tax debt is a huge one that we've been doing. Renovations, again, not now in Melbourne, but swimming pools are massive. They're probably the third biggest cause for taking out a personal loan for a property owner. Weddings, dental, medical, all that kind of stuff. All your clients are going to need funding for this, and taking out $10,000 from a mortgage, unless they have the redraw there, can be a lengthy process. And I don't think you guys actually get paid on anything under 50K. So this is a way that, again, you can service your clients and get paid for it at the same time. And then avoiding high interest debts is the same thing. It's just going back to credit cards, high interest debt, that kind of stuff. Again, taking out a personal loan, putting it over a much cheaper rate. I quoted somebody today for an unsecured personal loan, a homeowner, good credit, full-time, a gold brick of the client, and he got 6.7% unsecured. The referral process is nice and simple. I work as an agent on your behalf to your clients. I represent you guys. I'm not here to try and poach clients, anything like that. What we're looking for from a mortgage broker, we don't deal with bad credit. I'll never say no to a deal, but that's not the type of customers that we deal with. We're looking for someone with stable income, a clear purpose of what they're after, decent credit history, and specifically mortgage-based clients, somebody that has the ambition to either buy a home or buy another home or get into a better financial situation. If they're looking at coming for a personal loan because they want to go on a holiday around Europe, that's not generally the type of finance that we like to do. I'll see your question. I'll jump into questions straight after this. So the way that we work is just an email with an introduction to the customer. Generally, just email, CC them in, just tell them a bit who I am, tell me a bit about who they are. I'll then reach out to them via email. We'll arrange a time to have a chat and work that out between us. It's the way that I work is I have a chat to them as you do a normal little fact find. I will collect their information and I do an internal pre-qualification. I then run their quotes online to find out who's going to be the best. The quotes don't affect their credit score, and they don't charge them obviously for that process. I come back to them and present them with 2 or 3 of the best options I've found with that outline our interest, the interest rate, our fee, the lender fee, the monthly fee, any fees and charges. They get all this information up front, and then they can obviously decide. I generally CC you guys in the email as well, so you can, be on top of it. But I'm completely transparent. There's no point in hiding fees, hiding interest rates or anything until the documents get out and, it's too late for them to back out. It's not who we are. I provide everything up front. If they don't want to proceed with it up front, they're not going to want to proceed with it if it's in the contract. So that's the way that I work. Obviously, any commission that we make, there is a referral fee paid out to you guys. But personal loans, there's generally a very small commission. There's no flex like most asset loans. So it's a rate dependent on the customer's profile, not the rate that I decide the customer should get. Cool. If there's another slide. No, cool. That's pretty much it. Amit, your question was ride share income. Yes and no. We do have lenders that do accept ride share income. It is high interest rates. But the main factor with personal loans is they have to be a permanent resident or citizen. There's no visas. No one that I've found does visa. We can do visas for car loans, just not unsecured loans. It's just a blanket rule across all of them. They just don't accept visas. But yes, if they're permanent resident, they're on ride share. Yes, there are lenders that will do it. But obviously a higher rate based on risk. But 100% you can do it.
I have another question. If it's
Yeah,
okay,
of
I can
course.
drop the question in the chat, or I can ask directly,
No,
whatever
go
works.
for it.
Look, one of my clients is one of the decent sized builder. He does a lot of knockdown rebuild projects, either multiple duplexes or kind of a French province builds in Melbourne.
Mhm.
Once in a while, he gets a cash crunch, $100,000 or $50,000, and that's where he may ask for a personal loan. I haven't
Yeah.
helped him yet. He's found
Mhm.
other ways, but he asked me at least once, probably 6 months.
Yeah.
Financially, he's quite good. He has like 6 or 7 proper projects running in parallel. I know, I've seen his finances. I do his loans as well. Is that something we can look at?
Yeah, it is. So obviously I've got a very short time frame to discuss. So I picked on the unsecured personal lending. We 100%, a lot of my business is unsecured business lending. The business lending that we offer is very much in line with the banks, the ANZ. It's probably a little bit more expensive than ANZ, but in line with the Westpac, CBA and stuff like that. It's not like it's high tier. We do have high tier lending for your borrowers that can't go to your majors, but if he's a strong borrower, you're looking at the same sort of rates as your majors. The benefit with them is you only need 12-month bank statements. So no financials, no tax returns, no BAS statements, just 12 months. And then what they're calculating is revenue. So if he's got $100,000 a month in revenue, they'll lend mostly up to that 100. They'll lend up to 100,000. So the good lenders will lend up to 100% of what his monthly turnover is. We've got other lenders that can lend up to 150% of what the monthly turnover is. So it depends on, again, what he's after, how he's after, whether he's after a line of credit. So something like redraw, he can keep dipping into it and, only pays interest on the money he uses, or he's just after a term loan. He wants the,
Usually he
50K.
wants he's happy to pay 1 year's worth of interest, but he usually never needs money more than 2 months or 3 months ever.
Yeah, so like a revolving facility, and then it's just open. If he can get a proof that he can take out the money, pay it back, and then it just sits there. You might pay a small monthly fee to just keep the facility open, but then next 6 months, when it gets a bit tight, you can take money out of it again. So they'll lend, as I said, anywhere from 1 to 1.5%, 1.5 times of his monthly turnover. So again, if he's turning over 20 grand, he may get 25,000, 30,000 as a limit. If he's turning over 100 grand, he could get up to $150,000 as a limit.
Okay. I would love to have a chat with you special after this workshop. I'll let others ask questions as well. I'll contact you.
Yeah, please.
If-
Thanks, Amit. Cool. If anyone else has got questions, otherwise we'll do another Q&A at the end. But thank you.
Oh, amazing. Thanks, Donovan. And thanks, Amit, for asking questions too. Definitely reach out to Donovan. Like I've worked with him before and he's fantastic. So that's part of why I wanted to do the webinar with himself. So thanks, Donovan. Great presentation.
Thanks.
Of course. All right, I will now control, I guess, my slides. So, as it said on the screen, nobody buys a home alone, and this is something I'm a very big advocate for. So, I'm Joe Agresta. I have a business called Abodey, which is a property technology business. So, my background is in residential sales as a real estate agent. I did that for 6 years, And then I also went into insurance. I did that for equal amount of time before becoming starting Abodey, which really started off as a buyer's advocacy and has now formed into a property technology business. So what I'm talking to you guys about today is about how to add value to your customers beyond just finance. As we know, for a lot of owner-occupied buyers, they're buying property, but where I find the problem starts to happen is right here at pre-approval. So as an advocate, I saw this a lot. You give your buyer pre-approval, and within, let's say the average at the moment is about 10.1 months, they are sitting on market, not purchasing. So their pre-approval lapses every 3 months. You're renewing it, and they're still not finding the right asset that they want to buy. And usually what that comes to is decision paralysis. They're not sure of, they want to find that perfect home, whether it's their first home or a property to live in. They're very uncertain. And Finder did a great survey last year in 2025, and it came up with these results that 61% of first home buyers miss out on the property that they were seriously considering, 47% pay more than they budgeted for, and 45% end up regretting their purchase, which is my most disappointing stat that I read. No one should be regretting the type of property they purchase. And 11% lost a property because they didn't have pre-approval. So what Abodey is on a mission to do is help these customers through our platforms buy property in a much faster time frame with our proven method. So the way we do that is we have 2 platforms and it's one ecosystem. So most of the home buying tech services that exist are very skewed towards investors. On our side, we are skewed towards the owner-occupier buyers. So we have a mobile app. The way the mobile app works is we do property matching. So to help buyers make a decision on these properties, instead of going to realestate.com where you search, let's say you search an address, search a suburb, search 3-bed, 2-bath, 2-car, and it gives you 200 results. We developed an algorithm. And what that does for your customer is they enter their buying brief. So they'll tell us about their lifestyle, their budget, and their property needs. And then what our app is designed to do is go and find, like a buyer's advocate, the top 5 best suited properties. So let's say they said, I've got 2 kids, I have a dog, I need to be within 20 minutes to work, and I need to also be close to mum and dad. What our algorithm will do is search all available listings. So we are partnered with PropTrack, realestate.com, Landchecker, and ABS, and hotspotting.com.au. So all of our data is internal. We use our correct data providers, and then we search these addresses. And when it returns a match, similar to what you see on screen, I don't know why it's so blurry, but it'll give you the top 5 properties and it'll give you the data that you don't typically get access to. So your customer will be able to see, the average valuation tool that's been used by us. It'll give them the value, it'll give them the Landchecker premium property report, and then it will interpret and explain why it's a match. And this is key. So if they have those metrics of having kids and a dog, when it actually matches them, it'll tell them, hey, we found this property. It's 10 minutes from work. It's got a big backyard that's big enough for a dog and a cat. By the way, the average valuation sits here. So if you're making an offer and they're asking for this much, it might be overpriced. The aim of the app is we're not incentivized by real estate agents. We don't work with real estate agents, so we're not influenced to push a listing for the sake of pushing a listing. So we get all our listings from realestate.com, but we're partnered with them and we help buyers decide on those right properties. And then on top of that, we present them with other professionals that they can connect with. That is mortgage brokers like yourselves, buyers agents, conveyancers, building and pest, and removalists. So we really see ourselves as one ecosystem for these buyers. And then on the other side, for your brokers, we have a professional dashboard, which is what you see on the left here. This is a dashboard for you to see what your buyers are doing in the mobile app. So the idea is that let's say you have a customer, you add them into the mobile app, and then you get to see the activity in your professional dashboard, and you also get to create your own reports. Now, in the dashboard, you're allowed to create reports for investor profiles and owner-occupiers. So the professional platform allows you to work with 2 different audiences if you do both. Now, moving on to the app, this kind of explains a little bit about what I did. I kind of jumped ahead, but essentially the app is for your home buyers and Abodey Pro is for you guys and our partners. So it's a dashboard that turns pre-approval into homeowners. So any referred, if you've got clients sitting on your books that have had pre-approval, they've been sitting there for a few months, they're still not buying a property, this is where we see ourselves sitting in the market. So we give you activity alerts when the buyer is doing anything in the app. But on top of that, we also provide a concierge. So we have a team based here in Australia. They've been trained on the real estate process. And what they do is they nurture your customers through home buying. So for example, if a buyer downloads the app and we can see that you've referred them, our concierge will call that customer and check in with them. Now they're coming at it from a support system, because I call brokers buyer psychologists for a big reason, because often you are the first point of call for your buyer when they are lost, when they need to make an offer, when they don't know what to do, when they need to go to an auction. They call you and they say, oh, hey, Donovan, how do I, I'm going to make an offer on this property. How much should I offer? Or I don't know, what should I do? What should I do? You're basically a buyer's agent for free for these guys. We just want to fill that gap and be that support. So our concierge is there to support them. And on the next slide here, that's exactly what we're talking about. We're not a chatbot. We are literally giving them real-time support here in Australia. So we want to support the home buyers that have no idea. They've got questions, and anything that becomes too technical. So if they if they call our concierge service and say, hey, I'm going to an auction this weekend, how much should I offer on this property? That's when our team will refer back to you and say, look, you need to consult your broker. So anything that requires a financial services license, because we do not want to hold one, we will put it back to you, book an appointment on your behalf with that client that you had. And also in vice versa, because our mobile app for the general public comes at a cost. It's $350 a year as a one-off fee for customers to download and use the app. When you are the one in control, they don't have to pay for the app. So what that means is we will give them full service, we will look after them. And when they come to our concierge, like I said, we're there to support and guide. So a lot of the questions our concierge answer are usually around, is this normal? I've got a property that I'm thinking about buying. I don't know what to do. Do you have someone, like who should I talk to about a Section 32? That's when we start to connect them with our network of professionals like conveyancers, building and pest, and things like that. So the idea is to just help them facilitate that buying transaction a lot faster without being lost in the process. So how does it all work? Basically, once your customer has pre-approval, you, the broker, bring the buyer into the mobile app. The app will guide them, and the concierge that we have will support them and move through all those issues. And then our other professionals, like our buyers agents, building and pest, are all there to fill in those gaps when advice gets too specific. So once you've got your pre-approved clients added in, you do this in your Abodey Pro dashboard. You add their name and email, and it gives them an instant license. And that's it. Once they're in the app, the buyer downloads and they start getting property matches. So this is guided onboarding. They set up their brief. That goes through suburbs, lifestyle, and budget, as I mentioned. The AI will start giving them, instant matches. Each property comes with a personalised insight. So that's like suburb fit, growth outlook, flood zoning, bushfire zoning, average valuation, and a whole heap more. When they go into the next phase, the concierge is the one that I mentioned already. So if they're stuck on a question, if they need a building and pest inspection at the 11th hour, or if they're wondering if their offer's too high, our team will be there to support them. So it's an inbound team, but we also check in with them. So we will call them once a week to check in. When going through the next phase, then better professionals close the gaps. Now, what is interesting about this next phase of our business is we want to work with only 20 brokers across Australia just for this next phase to get the feedback on how this all works. Now, we want your feedback on the customer experience and also your actual professional dashboard as well. So if you've got your own professionals in your network, let's say you've partnered with a buyer's agent, you've partnered with a building and pest inspector or a conveyancer, and you want to bring those professionals into this ecosystem, we're working on that now to allow you guys to do that, because we realize that you have your own connections. So you don't need to use our guys, but they're there for any missing gaps that you don't fill at the moment. And then you see it all in your Abodey dashboard. So basically it's real-time activity alerts as the buyer hits each milestone. So you pull a personalized white label property insight. The buyer asks, what do you think of this property? So another function that you have access to is to generate white label reports. So when you get those questions, you might use Price Finder, RP Data, or Cotality to do a property report at the moment. We also support that service just for the brokers. So if a customer comes to you and says, hey, I'm looking at 1 Smith Street in Frankston, can I get some data or can I get an insight? What this system will do is allow you to search that address and it will generate a personalized report, as you can see in this kind of example here. Now, personalized property insights, like I said, we have built this engine over 3 years. So it is a very personalized engine. It's not ChatGPT where it's based on the internet. We have got it as a trained system. So what that means is we've partnered with the data providers you see on screen. We pay for that data. And then that is what our AI uses to make it contextualize it against a buyer profile. So everything is about what does the buyer want? And then our output is based on mathematical equations, data mining to understand, okay, well, if rental yield is really high, but vacancy rate is also high, our AI is not going to say that's a great place to invest. It's going to call out an insight and say the vacancy rate is not matching, the rental return. While the rental yield is good, your vacancy rate being low is a bit of a concern, being too high is a bit of a concern and may mean that you've got to wait longer to rent out that property. So it's an intelligent database that we took a lot of time to build, and it grows every single day. It's learning every single day. So this is kind of the ecosystem that we see home buying as. So the buyer is in the middle. Now at the top, you guys as the brokers are the origin point. So you're putting your brokers, you're putting your home buyers into this ecosystem, and then they are accessing, in the app, all the other professionals that might help them on the journey. And as I mentioned, you might have your own partners, so you are welcome to bring them into that journey as well. So this is one ecosystem, 5 professions. We want to make this as easy as possible, and that's where the concierge service really complements what we're doing. So that's the end of my presentation. I strongly believe that no buyers should buy a home alone. I believe that not every buyer can afford a buyer's advocate, which is a shame. So what we see ourselves as is that in-between service of I can't afford an advocate, but I can afford a different service, or I can use a service that's providing additional value to your clients through your own mortgage broker company. So that's, if anyone's got any questions, I'd love to hear them, whether they are for me or Donovan. I can see a couple in the chat. Tony, yes, it is Australia-wide for everyone. So it doesn't matter if you're a broker that deals with clients in New South Wales. I know brokers are mostly borderless. So yes, we do support any state across Australia, even those very regional towns. And also same for the buyers, it's nationwide for them too. So if they want to search a property in Northern Territory, in Queensland, doesn't matter, the property matching will work for them. And yes, so you can see there's no seller agent, correct. There's no real estate agent involved. That's not, it is a little bit by design. So the reason why is because home buyers, like when we look at realestate.com, it's powered by the real estate agents, right? So they're putting the stock inside the app. Where that kind of breaks trust with the home buyers is they know that they're being marketed to. Like the property's never going to say anything bad about what it does. It's always going to present the best possible house in the best street on the earth. And by design, so buyers have the confidence to know that we're not skewed by real estate agents, not because we're against them. We just want them to know that it's about them. So, but in saying that, they do absolutely form part of the ecosystem. And we do, if there's anyone that's looking to sell their home, we do have real estate agents available on our website that they can partner with. But yeah, they're not in the mobile app just yet. Is there any other questions from anyone? Even for Donovan or myself or even Stephen, if they've come to mind and we can pass them on. And feel free to come off mute or put them in the chat. Oh, good question, Amit. Cost. Yes, so cost involved is, like I said, for the first 20 brokers that we want to work with, we're closing that off on the 1st of June. It's $175 per month. That is unlimited licensing. So you can give that to all your home buyers if you wanted to. like I said, for us, it's about grandfathering the pricing at this stage. So what we're doing is locking in that price for the life of the product. All we ask is that you give feedback once a month and attend a meeting just to share the insights with the other 20 brokers. And then once the group closes on the 1st of June, the public pricing will change because we've discounted it quite a bit because we want feedback first. That's our main goal.
Cool.
Appreciate it.
Thanks, Joe.
Thanks, Joe. Oh, of course. Thank you, everyone, for coming today.
Yeah, I appreciate it, guys. This is obviously something Joe and I wanted to do. I was in charge of the Zoom meeting and I really messed that one up. So sorry. And I appreciate you guys all, being so patient and jumping on all the different Zoom links that we sent through. Thank you for showing up. There is a CPD code. I will post it in the chat now, but I'll also send you all out an email afterwards. Just to obviously go over who, everyone's contact details, obviously who spoke, so you can obviously reach out to them now. And obviously I'll put that CPD code in there as well. But any other questions you guys have, let us know now. Shoot us an email, get into contact with us afterwards. But it's been a lot of fun, and yeah, thank you so much.
Yeah, thank you guys so much for jumping on. I hope you have a beautiful weekend. Thank you for the questions and for listening. We really appreciate it. And hopefully we get to work with some of you guys.
Thank you. Bye.
Bye.
Thanks, guys.